Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yeah, we do have a bit of a problem this morning, but I'll just quickly go over to show you what that is. That is obviously this we've got going on right here. The stock market futures here are obviously predicting a pretty low open. So obviously markets have digested probably some of the pandemic information and the what is potentially overreactions to that over the weekend, and have decided that they want to risk off in today. So yeah, this is clearly going to be a bit of an issue unless this bounces and gets back above this horizontal. So basically back above 4,600, we're probably going to be in trouble, and there is no real reason why, if it's going to continue dumping, it can't take out this low, and then things will start to get pretty dire. So that is what we are contending with. I mean, we'll obviously look at the Bitcoin price and all that cool stuff, but if this is going to come down, and especially if it's going to take out this low, and if it isn't going to bounce and get back above here, then yeah, we are most likely going to see further downside price action in Bitcoin. So speaking of Bitcoin itself, we do obviously have room to maneuver in this channel. We could come down to we could come down below 45,000. But it's not ideal, obviously losing this horizontal here, and we'll just have to hope the downside, basically the underside of this channel, does support price action. But like I said, it will depend on the I guess it will depend on how much and how fast equities do move down, if they are to move down further, or they could very easily bounce at the open. That is just a futures market. The futures market before cash open can literally be anywhere, and then it can rally straight back and above, or down and below. It can do all sorts of things basically. So that is, I think, is the major concern. Obviously we don't want to be closing below, we don't want to be closing with a 45 handle on Bitcoin. Otherwise, yeah, more downside probably more likely. What we need to do is basically get back above this, back above 47,000, and then ideally back above 48 and a bit. This wick high here, this horizontal that we had drawn in, actually this wick high got all the way up to. That is what we need to happen. But like I said, I think it will depend on what stock markets do. Ethereum Satoshi parent doing its best also to hold above this horizontal, or hold around this horizontal, not quite above it at the moment, as you can see. So I mean, if it doesn't get back above and get back above these highs, then yeah, we could be looking at a move back down, and it could still start to look like a head and shoulders, just albeit a bit slanted. Maybe a quasimodo head and shoulders, and then yeah, and then realistically we're still looking at this support zone to give way for obviously significantly lower values. Oil also getting whacked, just proving that this is a reaction in markets due to the pandemic. Because obviously they're going to get hit with less travel and all that fun stuff. Dollar index having a bit of a bounce up here as well, and also 10-year easing off as well. If this 10-year does take out these lows and drops back down towards this 1.2 area, we'll just extend this along. Then yeah, it is gonna signal the fact that the market is pretty convinced the Fed is going to break something with its tightening, and stocks are going to get hit on that basis. Risk assets are going to get hit, and then the Fed will probably do an about turn in the face of the asset price depreciation, and then we just get to play that whole silly charade, that silly game of jawboning. The Fed can't actually do anything other than provide more liquidity, and yeah, just the same old playbook that we know has been going on for a long time. Gold, I'm starting to try and keep an eye on gold, because I want to see if this does actually react at some point. Because if this does react, I think the gold, precious metals market, and particularly gold, will indicate that finally the market is potentially seeing through the Fed BS. So until this does react, you just have to assume the market is ignoring the point that a lot of the Fed speakers is just jawboning and BS, and they're not actually going to do anything about inflation. So when we see the gold market react, maybe then then that is an indication that the wider market is starting to see that. Also, it should potentially be good for Bitcoin, but like I said, we can go down before we go up. We have to sometimes you have to force the Fed to make it to basically to do its about course. And markets are sitting pretty good at that. They are pretty good at forcing the Fed's hand. So yes, the Ethereum USD pairing, we'll have a look at that as well. It is back below this important level, back below obviously the $4,000 handle. So yeah, I mean, it is going to take the direction that Bitcoin takes. We could still probably also draw a descending channel in here as well. But we don't really need to. I think whilst we've got it in Bitcoin, ultimately this is the dollar value, and it will pretty much follow the dollar value of Bitcoin. But yeah, Ethereum, our favorite asset, $7,000 calls they've been getting bought for January. So let's hope they're right, and we see $7,000 in January. I mean, if we basically the stock markets do recover, Bitcoin does basically break this channel, get back above 53 and back into this zone. I'm pretty sure that if we have a 60 handle on Bitcoin, again a 60k handle, then I feel like we won't be far away from a $7,000 handle on Ethereum. And obviously if we then break through all-time highs for Bitcoin, I think we most certainly will quite quickly see a $7,000 handle for Ethereum. But nonetheless, we're going to see an $8,000 handle on Ethereum in less than 10 days anyway. So 8k Ethereum end of year, obviously here we come. So yeah, but yeah, we have got, I think the Fed is pretty much the Fed is not like the Fed's tapped out, but the Fed is having to, in inverted commas, tighten. The problem, the driver for markets at the moment is obviously the Build Back Better bill. And obviously the President, Joe Manchin. Oh, did I say the President, Joe Manchin? Of course he's not the President. I mean, the President's Joe Biden, obviously, not Joe Manchin. Joe Manchin is obviously not calling the shots, but yeah, Joe Manchin is obviously not too happy with obviously the increased spending in the face of inflation. Clearly, it's not good optics. It's not good economics. And yeah, they see that, but obviously we don't really live in a good economics environment. But yeah, that is a problem. The perception, obviously, the increased concern about inflation means that it's difficult to have a large spending bill, which is obviously going to be a fiscal stimulus, basically to markets, because obviously the monetary stimulus from the Fed is actually on the decline. Declining rate of change. They are still stimulating, obviously. They're still buying bonds each month, just less. So the rate of change, the second derivative is on a decline. So the government needs to step in. Basically. And obviously the concern is with inflation, and obviously then a big spending bill. So that is basically what the market is contending with at the moment. I wouldn't be surprised if over the weekend there's some news that I've not really seen, or some murmurings about just problems with that bill, or a lower amount to be spent. I think that's basically what is the main driver of this now. So yeah, it's going to be a fun, interesting week. We need stocks to recover. 4-hour stochastics, we'll have a look at those now. 4-hour pointing down, so downward pressure there. 10-hour and 12-hour, I'm sure, going to be pointing down again now with this move down. Yeah, literally just turning back down again here. 12-hour down, but potentially could turn back up. Daily coming back down again. Bi-daily turn back down. 3-day just hanging around there. 5-day and weekly. This would be nice to see these have a nice, we can't call it a bullish reset because obviously price action has come down, but a reset nonetheless, and then they can obviously then turn back up. So they're not, the 5-day and the weekly are not a million miles away from obviously bottoming out. So that could potentially be the next could help us basically start to move back upwards. And obviously bi-weekly has turned down now. Also bi-weekly has turned down, so we've only got the monthly looking good here. So yeah, like I said, I do think we are going to follow stock markets. Stock market's not looking good at the moment. If they can sort themselves out, I think we'll basically can bust our way out the top of this channel and onwards and upwards. If they can't, then it will be a case of how low do we go in stocks and crypto and all risk assets before the Fed basically does step in a more emphatic fashion. So yeah, that is it. That is the Monday morning lowdown. We will have an interesting week. I feel like we are going to have a have some fireworks this week. Obviously relatively liquid markets due to obviously people being on holiday and all that fun stuff as well. So yeah, there we go, guys. Remember, this is not a financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.